What's up, YouTube? Novadella Investment here again with another update. I'm starting to be consistent, y'all. I hope you can tell. I'm starting to be consistent. This is 2 weeks in a row. This is not normal. Um, so yeah, progress is being made, right? Let's go. Let's get right into it. So the account is sitting at $11,250. It's been a wild last 2 or 3 weeks in the stock market. A lot of red days, some green days, but more red days than anything, right? Especially the last few days in December were pretty crazy. Um, However, here's where the account sits today, right? As you can see, today's change, we went up $171 today, which is pretty good, which amounts to 1.5%. And then over the lifetime of this account, as you can see, we're sitting at 24%. And so we're moving on up. We're marching on um to bigger and better things. So let's take a look at the symphonies that I'm in. All right, we'll arrange it by today's since today's number. Oh, it's skewed because I deposited some money. So basically, the reason why this looks off is because with the exception of this one, these three symphonies here, I deposited money into those today, and then so that's the reason why the numbers look inflated the way they are. So don't mind this. What I did was I got out of some symphonies that were really underperforming, right? My standard, right? So they're beating the S&P 500, but they're really underperforming these other symphonies that I have more confidence in. So I closed those ones out, sold all, right? Sold all my shares in those symphonies, and then deposited and then added those funds into these symphonies. So that's what you're seeing. Um, here's what I'm holding going into next week, right? So going to next week, here's what the portfolio breakdown looks like. Most of my money is sitting in bill, right? Sitting in into this bond here, this T-bill. And then Mister makes up 7% of my holding, followed by SCHD, BGRO, and SVIX, and so on and so forth. I'll go ahead and scroll down so y'all can see what the rest of the allocations look like. Feel free to pause the video to take a look at what I'm holding. All right, so let's go back and take a look at the symphonies that I'm in. Right, uh, and here they are. And then let's arrange it by current value. Yeah, let's do that. And then so here's what you can see. Boom, on the left hand side you see what's been deposited. Right hand side you see what the current value looks like. Simple, right? I'm gonna scroll down so you guys can see what's going on, and once again, feel free to pause to either write down the symphonies that I'm in, so you can do your own due diligence or research yourself in case you want to invest in them, or whatever your situation is, right? So let's take a look. And there you have it. So that rounds out all the symphonies that I'm holding. Interesting thing that I do. So I try not to jump into symphonies that haven't been proven to my standards. And what I mean by that is when I'm looking at a symphony, I want to see that over the course of the time that it's existed. So let's take a look at this one, for example, right? This one has existed since August 2nd of 2023. Sorry, right? So let's go back and look at the performance over time. So August of 2023. Look at this one, right? So this one's been around since 2023. So we've hit a year at least, right? So boom, I like that. Here's what the performance looks like simulated. So if you had invested in $100,000 at that time, right, June 13, 2023, you'll be sitting at 1,103,000 currently, right? And then so let's take a look at my other criteria. So boom, yep, it meets the criteria as far as the longevity type are criteria, right? This is just my personal thing, right? I'm not saying this is the right way or the wrong way. I'm not giving you any advice. I'm just trying to tell you how I choose these symphonies that I'm experimenting with, right? Okay, so boom, it's been around for at least a year. Good. Okay. Cool. Which and keep in mind, I'm not saying that a year is the standard or a year is good or bad or appropriate or inappropriate. That's just the way I do it. So I don't want to hear any smoke from anybody as far as what's right or what's wrong. This is just the way I do it. Take it or leave it. You don't have to. Um, so yep, over that time, cumulative 1,000% return, and that's if you annualize it, you'll see that's a 368 percent per year. Is that realistic? Can it do that going forward? Who knows? I'm not saying that. All I'm saying is that's what I'm looking at, and it's appealing to me. Right? Do whatever you want to do with your money. All right. So trailing for the last month, as you can see, 12%, which is really good. Last 3 months, 72%. Considering how crazy the market has been as far as being up and down, 72% over the last 3 months is pretty good. Sharp ratio, I want to see at least. I want to see above 2, right? Because I'm not here to just simply like I'm not investing in Composer just to do mediocre, right? I'm trying to invest in symphonies that are that have potential to return a massive amount of money, right? If that's because if not, then why invest in it? I could just throw my money in the S&P 500 and just be comfortable with a 22% return annualized. You see what I'm saying? With a low drawdown, right? Low drawdown and so on and so forth. But um, this composer is simply to go big or go home. I'm experimenting, so that's my criteria. Two, at least two. Um, Sharp ratio needs to be at least 2. That's it. So a year at least in as far as existing, and not just existing, but real time trading, and then at least a 2 sharp ratio, and then max drawdown. I don't really care about the max drawdown that much. The game pain for me is not that important as long as the uh the annualized or the annualized is above 100. Right, I get it. I know it's very very ambitious, but I want to see above 100 annualized return, and then so the 47% drawdown to me is not all that to me for me it's not all that it's not all that the game pain for me is not it's okay. I'm willing to risk a 47% drawdown um, to make a 368% annualized return with a 2% sharp ratio and a 7.8 Calmer ratio. I'm not going to explain what those are on this video. If you are interested in learning about sharp and Calmer and whatever other ratios are out there, there's plenty of different uh, I guess instruments to use to gauge investment success, I guess potential for success and so on. You guys can go research that. But um, for me, I like using the Sharp and the Calmer, and coincidentally, that's what Composer has as the standard as well. So I want to see above a 5 on the Calmer, right? Above a 2.0 on the Sharp, all right? And then, like I said, Mark's drawdown, I really don't care that much as long as it is like 71 is crazy. Like missed MSTX, which is like the freaking leveraged Mister, has a 71% drawdown. That's if you can withstand that without panicking, then hey, more money, more I guess more power to you. But for me, 47% is my sweet spot. I'm okay with being down 47% drawdown. That means that means that if you have $1,000 invested, right, and you haven't made any funds as of yet, and you invested at right at the tip of a drawdown, you're going to be down 57,000 or $47,000 before making any profit. So if you're okay with that type of I guess account performance, then hey, that's what this means. I'm okay with it. Some people are not. Cool. Just I trust the Sharp ratio. I trust Calmer based on the year performance or the 2 year performance really going on of this symphony. To not panic when it comes to that. So boom, that's my criteria, right? So if you look at a lot of these symphonies that I'm in, you'll see that most of these match my criteria. Here's another one, TQQ for the long term, everybody's favorite. I made an adjustment to this, so that's why this date is skewed. So let's not use that one. This one right here, I went up against my criteria earlier on, but I was lucky, right? This is actually I've been one of the best performing symphonies since I've had it. But this has been around since February of last year. So when I originally invested in it, it wasn't quite at a year yet, right? But I took a leap of faith and it worked out. I'm not saying to do the same thing, but that's just what I did. And then so if you look at last year to now, based on $100,000 investment, you see where it's at, where it's sitting at. And then this drawdown is a lot better than the last one. See, 19% max drawdown. Um, since its inception as far as um, live trading, as you can see here. So boom, yep. Cumulative since that time, since February of last year, it's done 100 or $789 or 789%, um, with a max drawdown of 19, and then see the Sharpe ratio. Boom over 2, boom over 5. 58 is crazy. I'm not saying that's gonna last, right? And we'll take a look at one more. Let's take a look at two more. Rage. Like I said, you guys can go do your own research. You have the you see what it is. You guys go search for it on some Composer. But Rage is another one that I like. Rage has been around since April of 2023. So let's go back and look at the similar results from back then, right? So as you can see, that's the performance, right? Boom. That's the value that it would be sitting at currently if you had invested um, in the beginning. That's the annual return of 141%. Cumulative is here. There's a Sharpe ratio above 2, right? Max drawdown is really good, 12%. Considering, look at TQQ. It's beating TQQ in the numbers, and with a better drawdown percentage. And then the Calmer is above 5. And then let's look at one last one here, which is this one. I'm not gonna go into this one, but this symphony here, I really like the performance of it. Granted, it's dipped below. Let's go back. Say June. It's been around since June of 2023, right? June 6th of 2023. Now the Sharpe ratio on this one is below 2, right? I'll warn you now. But I really like the way it performed. Somebody said success is scary. Let's hide from the scary market when we are up. Somewhat more aggressive version. This is one of the symphonies I've been in for the longest, and this one performed really well back in about August, September, when the market was doing some crazy stuff. This symphony here weathered the storm and did really good during that time. So I've held on to it, despite it not meeting one of my criterias. But take a look at what it looks like. So if you had invested 100,000 in June of 2023, you'll be sitting at 349,000 currently. And then so here are the numbers. Here's the Sharpe ratio. Ooh, right below 2. However, um, it's performed really well. Look at the numbers compared to SPA with around the same amount of drawdown. So the gain pain is not that rough, right? Granted, SPA has a better Sharpe ratio, right? Because he has a lower. I think it's because he has a lower max drawdown, but still, it's way outperform. It's killed SPA and TQQQ, right? And we know how crazy the Qs have been going over the past 2 years, but it's blowing those out the water, and then so here's a common ratio above 5 as well. So I really like this one. Who knows if it will continue to perform the way it's performed, but I really like it. The chart looks crazy because I think most of the gains came from here. This was, what date was this? This was in August. So most of the gains came here, but it's steady. I mean, as you can see over time. who knows if we have another one of these um, runs here. But we'll see. We'll see how it performs over time. We continue to monitor it. This is an interesting symphony as well. This is something I edited. We'll see how it performs. Right. As you can see, not much data on this one. Right. Not much funds really invested in this one either. Um, as a matter of fact, it's lost money since since inception. However, I'll continue to monitor it and see how it performs over time. But it's basically a spin-off of this. Of this. Ooh, where's it at? Am I no longer in it? I guess I'm no longer in it in the other one. But oh yeah, here it is. Here it is. It's a spin-off of this. Of this, I basically just swapped out some of the symbols that were in this one and threw it into through MS threw in MS TX and TQQ, and then so we'll see how that performs over time. Right now I'm up, as you can see. Right, I deposited $312 into this thing, and I'm up like $70. But as you can see, it was down for a while, and then today it just took off 30% gain today. So yeah, let me show you my watch list before I get out of here. I think next time I'll go ahead and look and show you my watch list. I have a bunch of unique symphonies here in my watch list. Some of them are on Composer. Some of them I got. Some of them are through the Discord that I've had for a long time, but I'm just monitoring them. And then so periodically I'll go in here and I'll check. Right, I'll sort it by out of sample date, which is the date that it started trading live. I'll go out here and check to see if any symphonies have hit my criteria, right? And then also meets the annualized return of over 100. As you can see, this one has, right? This one has, however, the Sharpe ratio is down, and then look at the max drawdowns, 49%, which is pretty crazy. But this one's performed well since since its inception. But I'm not sure if most people would be comfortable with an account that's down 50%, have the potential to be down 50% during its time. I'll come out here periodically and check and see which ones look appealing to me, and I'll probably jump in that going forward. Here's one conservative 65% annualized, been around for almost for two years, really, right? 2 years, going on 3 this year. It's performed really relevantly, really good, right? 2% Sharpe ratio, 18% max drawdown, not bad, right? Not bad. But I go out here sometimes and just check to see if anything is out here that's appealing to me, that meets my criteria, and then if it is, I go back and reevaluate what's in the what I'm holding on to, add more funds to the portfolio, right, and invest in those symphonies, um, or close out an underperforming symphony that's no longer meets my criteria and put the funds towards that. But I'm rambling now. I don't want to do too much rambling. Subscribe to the video. Ask questions if you like. It's an open book. We're here to learn from it, to learn and be transparent as possible. So until next time, I'll see y'all on the next video. Peace.